All right, welcome to Talk Tickers. Today, we are digging into Delta Airlines' latest earnings for Q4 2025. This was a really interesting one, a quarter of some pretty mixed signals. And honestly, the way the market reacted tells a fascinating story. So let's get right into it.
Okay, so here's how we're going to break this down. First, we'll hit the Q4 earnings snapshot, just the headlines. Then we'll get into what's behind those numbers. After that, we'll cover management's guidance for the future, see how the market reacted, and wrap it all up with our take, what we're calling the next call.
All right, first up, the results. And really, this was a classic case of a mixed report. You had the top and bottom lines telling two completely different stories, which, as you can imagine, set the tone for the whole day.
Okay, so let's look at the actual numbers. As you can see, Delta absolutely crushed it on earnings. They beat expectations not just on an adjusted basis, but also on a GAAP basis. That's, the more by-the-book standard accounting method. But, and this is a big but, they fell short on revenue. Right away, this created a really conflicting narrative for investors. What do you do with that?
And just to put a finer point on it, that GAAP earnings per share, it came in hot. We're talking a solid 29 cents above what Wall Street was expecting. So yeah, on the profitability side of things, a definite win. But then you look at the top line, the revenue, and it's a completely different story. They missed by about $300 million. And right there, that's the tension that really defined everything that followed. Strong profits, but kind of soft sales. This is what the market had to grapple with.
Okay, so let's dig a little deeper. Let's get into the why behind all this. What was management's story for this kind of performance?
So the good news for Delta really boils down to two things. First, people are still paying up for those premium seats. That's a huge deal. And second, their loyalty program, that SkyMiles partnership with Amex, is just an absolute profit machine. But management also had to acknowledge some headwinds. They mentioned rising costs and some signals that demand might be softening up a bit in the near term.
Now, what's really interesting is how CEO Ed Bastion framed all this. He pretty much glossed over the revenue miss. Instead, he spun these results as a major win for Delta's long-term strategy, really hammering home the idea that their premium brand is what makes them different and durable. But look, experienced investors, they trade on what's coming next, not what just happened. And that brings us to what is, honestly, the most crucial part of the entire call, the forward guidance. And wow, this slide just brilliantly illustrates that conflict we've been talking about. On one hand, you've got the outlook for the next quarter, Q1, which was way softer than anyone expected. But then on the other hand, management is still super confident about the full year. The problem is that weak near-term outlook, it basically overshadowed everything else.
So how did the market weigh all this? A pretty solid quarter, but a soft outlook? Well, the price action tells you everything you need to know. Yep, Delta shares fell about 2.6% right out of the gate in early trading right after the call. The market didn't waste any time making up its mind.
And that brings us to the big question, right? They clearly beat on earnings, so why on earth did the stock trade down?
And the answer is actually pretty simple. For investors, the risk of a slowdown in the very near future was just way more important than how strong the last quarter was. The weak guidance for Q1 completely trumped the strong results from Q4. Simple as that. Okay, so what does this all mean for investors? What's the so what here, and what should you be watching for heading into the next quarter? This is what we call the next call. All right, here are the three things that we think will drive the stock more than anything else between now and the next earnings report. First, you've got to watch the demand data. We're talking monthly booking trends. Are they turning up or down? Second, keep a close eye on their costs, especially fuel, of course, but also their other costs. And third, and this is the big one, focus on the next guidance update. That's going to be the key catalyst.
So, with all that in mind, we are initiating our coverage with a market perform rating. Look, the company is executing really well, no doubt about it, but that neutral to cautious outlook on demand in the near term, well, it's enough to keep us on the sidelines for now.
Now, if you wanted to take a more aggressive stance, here's a potential trade idea. You could look at a pairs trade, go long on Delta, while shorting one of the more commodity-exposed, low-cost carriers. This is basically a bet that Delta's premium strategy will act as a kind of defensive cushion if the travel market really does soften up.
And this really leaves us with the key question that's going to define this stock's future. Is Delta's whole premium strategy a truly durable moat around their business? Or is it just a fair-weather friend that works when times are good? Because honestly, the answer to that is what will decide where the stock goes from here.
And just as a reminder, this is not financial advice.